Ladies and gentlemen, good day and welcome to the SPML Infra Ltd Q3 and 9 months FY’25 earnings conference call. As a reminder, all participant line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pranay Premkumar from Adfactor PR Investor Relations team. Thank you, and over to you, sir.
Good evening, everyone. From the senior management, we have with us Mr. Manoj Digga, Director Commercial and Chief Financial Officer, and Mr. Sujit Kumar Junjunwala, VP Fund Management and Banking. Before we begin the conference, I would like to mention that some of the statements made during the course of today's call may be forward-looking in nature, including those related to the future financial and operating performances, benefits and synergies of the company's strategies, future opportunities, and growth of the market of the company's services. Further, I would like to mention that some of the statements made in today's conference may involve risks and uncertainties. Thank you, and over to you, Mr. Manoj Digga.
Thanks, Pranay. Good evening and thank you for joining the conference call of our third quarter and 9 months of FY’25 financial result of SPML Infra Ltd. I would like to extend greetings for a prosperous new year. As we are meeting for the first time in 2025, I will give you a brief overview of the industry trend, business updates, and we will also walk through the company's financial performance over this period. Regarding the water sector, the central government remains focused on building robust infrastructure with a specific focus towards the water infra segment. Given that the water crisis has now reached a very critical point and disturbing implications, it is much more imperative and urgent to act now to protect these vital resources. NITI Aayog has also reported that 25 major cities in India, including Delhi, Bengaluru and Chennai, face the imminent danger of groundwater depletion by 2025. United Nations has also projected India to become water-stressed by 2025. There are other factors also affecting water resources like global warming, leading to erratic monsoon and accelerated water evaporation, and the increased urbanization and inefficient infrastructure to increase the burden of water supply. With existing and emerging challenges, a well-designed and resilient water infrastructure system is an urgent need. As you are aware, the Jal Jeevan Mission was initiated in 2019 with an estimated outlay of 3.6 lakh crore in partnership with the state government to provide safe water through individual household tap connections by December 2024 to all rural households. This scheme has resulted in providing 15 crore plus households with functional tap water connection covering almost 80% of the Indian rural population. It is very admirable to see the continuous emphasis on water infrastructure through Jal Jeevan Mission, which has now been extended till 2028 in order to achieve 100% coverage. The outlay of 67,000 crore for the current financial has been announced in the Union Budget this year. We completely support this initiative and look at this as an opportunity for further contribute towards building an efficient water infrastructure network in India. Apart from these initiatives, our Honorable Prime Minister has gone a step further as he planned to dedicate a project worth around 40,000 crore to link 11 rivers in Rajasthan, which is currently facing severe water crisis. He also laid the foundation stone of Ken Batwa river linking project, which is estimated to cost 44,605 crore in Madhya Pradesh, which aims to solve the water issues in Bundelkhand region spread across part of Uttar Pradesh and Madhya Pradesh. Overall, the current government of India is very serious in securing the country's water future through strategic policy, sustainable initiative, and robust infrastructure development. As regards the SPML business and operation, coming to our business and operation, as we have been highlighted that we operate in 3 major segments of water supply, out of which river to reservoir, which is a bulk business segment, is our preferred business area, which basically includes laying large diameter pipeline for water transportation, while the other two segments are reservoir to tab and home to rivers. Q3 has been a muted quarter in terms of the revenue growth, not only for us, but also for the entire industry. The quantum of order awarded is quite low value due to delay in approval at the end of the central and state government. With the new budget and fund allocation in place, we are confident that fresh tenders will start floating in which could help into build a strong revenue projection. Our order book currently stands at 2,500 crore and orders around rupees 2,800 crores are in L1 stage, and we are expected to get materialized into profitable order for us in Q4 financial year 25 and Q1 of 26 in tranches. We are building for substantial number of project value, almost 9,000 crore, which are currently at bidding stage, and we are very confident that our strong pre-qualification credentials and vast experience will enable us to successfully convert those into order wins. We are pleased to announce that post-successful evaluation of our financial performance, our long-term fund-based term loan of rupees 477 crore has been assigned a rating BBB- stable, while the long-term short-term proposed non-fund-based of rupees 200 crore has been assigned a rating of BBB- stable by ICRA. This has given us an opportunity to taking the regular limit with the bank at a lower margin and raise further debt for our future expansion. I am also pleased to inform you all that SPML Infra has been achieved an all-time best ranked of 14 in the latest GWI World Top 50 Private Water Companies list. It's an accomplishment for us that we are among the top 15 companies worldwide dealing in water management. Our arbitration proceedings from which our repayment of debt is likely linked are progressing satisfactorily, and the company is very much confident a substantial amount of cash flow will be received from the arbitration award for the growth of the company after repayment to NARCL dues. As regarding Q3 and 9-month financial year 25 performance, we will now move forward for quarterly financial performance. On a standalone basis, we recorded a revenue of 201 crore in Q3 financial year 25 as compared to 259 crore in Q3 financial year 24. As mentioned earlier, revenue has been impacted in this quarter due to lower order inflow in the market, but as I mentioned earlier, there are orders in L1 status which provide us revenue visibility. Our EBITDA has recorded at 23 crore compared to 5 crore in last quarter. We recorded a PAT of 10.4 crore in Q3 financial year 25 as compared to rupees 1 crore in the last year in the same quarter. For Q3 financial year 25, our EBITDA margin and PAT margin stood at 11.5% and 5.2 respectively, which is in line with our targeted EBITDA margin. With regard to our 9-month performance, we recorded revenue of rupees 622.7 crore in 9-month financial year 25 as compared to 867 crore in 9-month financial year 24. Our EBITDA has recorded at 75.7 crore compared to 11.4 crore in the same period in last year. We recorded PAT of 37.5 crore in 9-month financial year as compared to 2 crore in 9-month financial year 24. We are confident that going forward, our margin profile will keep on improving as we have been bidding for selected projects which would improve our overall profitability. Before I conclude, I would like to mention that we are actively exploring opportunity in the battery energy storage system market, considering the huge focus of the government and the business volume going to come, as we have adequately pre-qualified to participate in this tender, as well as this highlights our expertise in the growing field of large-scale renewable energy activity. With this, we conclude our opening remarks. We now open for floor for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kevin from Siddharth Partners. Please go ahead.
I think full congratulations for the good set of numbers.
Sorry to interrupt, sir.
आवाज clear नहीं है boss.
I would request you to please use your handset.
Is it better now?
हाँ, it's better.
Yes.
Good evening, sir. Full congratulations for the good set of numbers and year-on-year improvement. Question.
Thank you.
Is like currently guidance is given for L1 project and the future pipeline. I just missed that number. If you could repeat that number, like 2,500 is current order book. We have been awarded I think block project. What would be that number?
We have basically 2,853. There are 5 tenders where we are L1. That is one. There are 4 tenders and roughly around 9,518 crore of bid, which we have targeted to bid into going forward. Already announced and the tenders are going to be started soon.
Okay. Second question is, sir, can you help us with cash and cash equivalent position and net position as on date, let's say, updated number?
The total cash balance roughly around 270 crore. We are having the cash balance as on 31st December and roughly around 2,500 crore order book we are having in our book.
And debt-wise, the only debt which we have is something which is structured with...
Debt, basically we have roughly around 460 crore of debt which is there in our book, which this is along with the interest which we have paid in various tranches from the arbitration award up to 2028.
Understood.
So that will award will keep on coming and that will keep on going. Nothing is going to be paid from the cash flow.
Sure. I know that when we last met, we had this discussion. Just one question on cash and cash equivalents, sir. We had seen some number around 470 crore in your earlier presentation. Some money was to come. So
that is basically the last time when we have issued certain warrant and certain equity. So roughly around 150 crore approx further warrant is going to come and certain amount of roughly around 30 crore, 26 crore from Vivad Se Vishwas is going to come. So if we add this together, then it will be around 450 crore.
Understood. So that's still awaited, that warrant subscription and Vivad Se Vishwas. Is it expected in Q4, sir?
No, nothing. Q4 we will expect some sort of Vivad Se Vishwas money from Q4. The entire 26 crore can come or at least 15 crore will come in Q4. Warrant to based on the need we will demand from the shareholders.
Sure.
At the moment we are having 260 crore and then again the bank guarantee at a lower margin we are expecting. So we may not require immediately this warrant money.
Understood. Last question, sir. This warrant money which is to come, is it primarily from NARCL or somebody, or who are this investor, large investor?
The large investor is majorly from the promoter. And then the last time we have roughly around 294 crore of preferential issue we have made, out of which roughly around 115 crore, which is going to come from the warrant money. 118 crore which is going to come from the warrant money and 37.5 crore was our earlier warrant which we have issued to the promoter. So from these two warrants the money is going to come.
Understood. That's helpful, sir. Thank you very much.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Raman from Sequent Investments. Please go ahead.
Hello, sir. Can you hear me?
Yes, I can hear you.
Sir, in the previous quarter, you guided that we'll do the revenue equivalent of FY'24, but there has been unexpected slowdown this quarter as well. So, can we do the same revenue, or it will be less than FY'22?
See, as I told you in my last two conversations, because this year, because of the various factors, including the election and then the various other issues of the government, the deployment of fund by the government has reduced substantially. And as I told in the first quarter itself, that Q2, Q3 will remain tight, which has happened. It is almost all the companies' Q3 results are not that good. In our case, we are able to match the more or less compared to our last quarter number. But Q4, again, I feel some betterment. But Q4, there will be a pressure. There will remain into the pressure, but some betterment from the Q3. But Q1 going forward, from next year, it should be better.
Okay, we are expecting that Q1 will be like the business will be normalized, right?
I think Q1 should be normalized. By that time, we will have new order revenue also come into the picture. So from Q1 onward, there will be much better into the revenue side and profitability side. Three.
Also, can you give us what's the revenue guidance for FY'26?
For FY'20 this year, for the Q4?
No, next year, the whole year. What are you aiming?
Next year it will be better from this year. We have the target of revenue jump 30 to 50%. That should happen. That depends on how quickly we get the order book, which are going to start coming in tranches from the Q4 and maybe slightly early part of the Q1. And then going forward, the further order. What happened in the last 8, 9 months, 6 months, there is a slowdown into the order position and order tendering and order allotment. I think the Q4, Q1 will be better off because a lot of tenders are going to come. So that will give the more visibility on procuring the order, and that result will come into the next year performance.
Okay, so basically there was a slowdown in the tender in this year, which will be reflected in the next year, right?
I think part will be covered by the government in the next year, Q1 and Q2.
Okay. With respect to Q4, can we expect the margins to improve, or will it be in the range of 4 to 5%?
As we explained in every presentation, our focus is not on the top line. Our focus will be on the bottom line. Number two, there is enough order in the market. So at this moment, we can be, and we are a very prominent player. So we can be very selective in taking the orders. So our target is getting the order between 10 to 15% margin, and we are still continuing with that. We are targeting those orders only where we will have 10 to 15% margin.
Okay. Sir, I have a doubt with respect to the repayment of NARC dues and arbitration. Can you please explain me the repayment of NARC dues using the arbitration which you were saying earlier?
The total our NARCL due we have settled in by way of 700 crore, out of which we have already paid last year roughly around 224 crore. This year we have further paid roughly around 13 crore. So, and this year with the sale of one property for which agreement has already been executed, we will further pay 30 crore. So roughly around by this year end, there will be a loan book of roughly around 433 crore, which we have to pay in next next 4 years. And we have the arbitration award of roughly around 625 crore accumulated interest. This accumulation interest is keep on increasing every day, whereas our loan book has been frozen at 433 crore we have to pay. Our target is to get the arbitration award is into next 3 to 4 years in tranches, like one of the arbitration award at the Supreme final hearing level of roughly around 200 crore. So this we will keep on getting, and part we will keep on paying to the NARCL. So NARCL total dues we have to pay in 7 years, out of which and NARCL is due has to be paid from the arbitration award. Arbitration of around 433 crore the award dues we have to pay, against which we have the arbitration award, which if we take the 4 years, which is our targeted period, by which we should get roughly around 800 crore. So we are double covered into arbitration award. We are double covered into the period. So I don't think there will be any problem. Whatever amount is going to come from the arbitration, we are paying 75% to the NARCL, 25% further we are keeping for our cash flow purpose. So suppose we get the 800 crore, roughly around 433 crore we will pay to the NARCL, and balance will further infuse as a cash to the company for doing the business.
So this 433 crores, which you said the NARCL due by the end of FY'25, is it different from the debt component, like which you mentioned earlier of 460 crores?
No, as I told you, now this year we have to pay around 44 crore, out of which 40 crore by sale of property, which we have identified and we have executed the agreement also, 4 crore from the FD interest and the cash flow position. So 40 crore, out of this 40 crore we have already received certain amount as advance. That advance we have paid to the NARCL. So as I told you, 224 crore we paid last year, 44 crore we are paying this year, minus 700 crore is 433 crore.
Sorry to interrupt, sir. I would request you to rejoin the queue for your follow-up question. Thank you. The next question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thanks for the opportunity. Sir, I just wanted to confirm, when you say targeting 10 to 15% margins, so that is EBITDA margins, right? Not PAT margins.
मतलब इसमें तो हमारे क्या है ना कि हमारे तो कोई इंटरेस्ट है ही नहीं. We don't have to pay any interest, only the Ind AS adjustment we have to pay. So whatever is the EBITDA, that is the PAT, because depreciation भी हमारा कुछ है नहीं.
Correct.
So basically the gross margin which we are going from the plant, and now there are certain overhead expenditure which we will allocate to the various projects. So very small person come to the every project into that. So margin, gross margin will be 10 to 15%, net margin between 8 to 10%.
All right, got it. Thank you.
Thank you. The next question is from the line of Prathamesh Devar from Tiger Assets. Please go ahead.
Yes, sir. Just a couple of questions. So, sir, first just wanted to know, what's the reason for the order delays in the industry, in the water industry? Because I think we are saying it from Q2, Q3. So, what is the main reason we are getting a lot of order delays?
If you see, the Jal Jeevan Mission itself renewal was pending. So that's the reason all the orders which are linked with the Jal Jeevan Mission, they tendered and not allotting the order, or they are not doing the tender. So which has done now? Because Jal Jeevan Mission they have extended up to 2028, and the government various tenders have got stuck into the government action because the government was very silent in Q2 and Q3. Now the entire tendering has started process, and we have applied into the 2,800 crore which is there in our hand. We are expecting in tranches in part maximum will be this March or maybe early by April, we will get this order. And 9,800 crore, the order which is in the tender position, we are expecting that by the first quarter, all the tenders will come. And there also we should get a substantial portion. So it's a issue with the water department because of the Jal Jeevan Mission renewal was pending. All the tender was slow, which is applicable to all the water EPC company. But now the tender, as I told you, last 6 months since the tender has not come, we are expecting a substantial growth into the Q3 and Q1 into the tender. And some part of the last slowdown will be covered up by these 2 quarters.
Okay, got it, sir. And so my second question will be on the BESS side. So what sort of growth and orders are we looking at from this segment? And when are we expecting any orders from this segment? And how much it's going to contribute in top line in coming time?
Means if you see that this 3,000 crore, 2,853 specifically, these are the orders which we are in hand. This we are expecting in tranches this quarter and the early part of the next quarter. And this 9,800 crore, we are expecting a substantial onto that. But let's see how it pan out. And every order which we are targeting, it is going to be completed in 3.5 years. So whatever order we will get, 1/3 of that, roughly around 1/3, is going to be executed into every year. And all this tender is basically, we are targeting 12 to 15%, 15% margin. So whatever is the margin into the turnover, that is going to come into the revenue, into the book. So that's the growth is going to come going forward, plus our existing turnover.
Yeah, so actually I was asking about our battery energy storage system business. So from there, what sort of order and when are we expecting orders to come in? And
battery BESS has recently started. The tender has also started recently. So we are expecting at least one order of a battery energy storage system into this financial year, 2025-26. So we are not, one order we are expecting in the whole financial year. And at least, if we get more, then it is better. But water business, we are going to expect more.
Okay. So in value terms, can you define like how much that order will be for BESS?
In the BESS?
Yeah, BESS.
BESS is depending upon which order we will get. It starts from 500 crore to 1,000 crore or 300 crore to 1,000 crore. So which order we will get, what to give, we'll keep you updating on every quarter.
Okay, sir. Thank you.
Thank you. The next question is from the line of Ajinkya, who is an individual investor. Please go ahead.
Hello, sir. I just wanted to ask you about what are the, what is the timeline and what is the revenue recognition of these orders you are getting, and how are you recognizing revenue since you said you will complete the orders of 3 to 3.5 years. So I just want to know more about it.
This is the accounting standard. So there is a very clear-cut guideline provided by the accounting standard on the revenue recognition. But if you, very thumb rule, you can take, because the orders are in the 3.5 years completion, the last portion will be very less revenue because it's mainly the touch-up and final billing and final startup revenue, etc. But the most of the revenue will be built into the next 3 years. So if it is a 1,000 crore order, like in the Jharkhand, we are expecting roughly around 620 crore, and maybe February that order we will get. If that is going to get that in every year, we will get roughly around 200 crore order into the revenue, convert into the revenue. So next 3 years, it will be converted 2 years, approximately 200 crore every year. And the same way, other orders which we will keep on getting, that will be converted into approx 1/3. It can be slightly here and there, but for your calculation purpose, you can take 1/3 of your total revenue of the order will be converted into revenue every year, if it is a 3 year. If it is a 4-year, then 25% of the order which will cover into every year.
Okay, sir. Okay. And another question, it's more on the financing part. Like, what could be the breakup, like short-term and long-term debt, and how are you planning to finance the, like, since it is a capital-intensive business, how are you planning to finance the whole orders next year? Like,
as I told you, this our NARCL, it's all long-term. Basically, only like this year we have to pay 40 crores in accounts. We have to show short-term as a 30 crore, which is left into which we have to pay into this year. Rest all are long-term because all are linked with the arbitration award, and long-term we have to make the payment. Whenever the arbitration award comes, we have to pay 75% and 25% comes to the company as an additional cash.
Okay.
On the working capital, we have applied for certain BG limit. Whenever that BG comes, it will not come into the financial debt. It will be only the non-fund-based limit. We don't require any fund-based limit because we have the sufficient cash flow in our book. Only the BG is required for bidding, and that is we are going to take from 200 crore to 400 crore from the various banks. Whenever it comes, it will be only into the contingent liability. It will not be in the financial debt.
Okay. Just a follow-up question. So, do you see your finance cost going up in the coming quarters or year?
This finance cost, as I told you, it's 700 crore is inclusive of interest. Every quarter we have to provide into the books of account. It's only the Ind AS adjustment. We don't have to pay anything or any cost element into our book. Roughly around that 9 crore is basically, and there is some JCO, there is some operational this mobilization advance, some interest we have to pay. That's the reason slightly the finance cost has been increased. Otherwise, our finance cost will be roughly around 9 crore every quarter, which is the Ind AS adjustment. It is nothing we have to pay. It's only the provision.
Okay, sir. Okay. Thank you. Thanks a lot, sir.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next follow-up question is from the line of Raman from Sequent Investments. Please go ahead.
Hi, sir. Thanks for letting us ask a follow-up question. So, what was the total warrant size which was issued to promoter? And I think there were 2 times the warrants were issued. So, what was the total warrant size, and what will be the funds used for?
So, the total warrant from the promoter and investor is roughly around 155 crore, which we have to receive. Out of which 37.5 crore of the promoter, which has been issued earlier, will come in the Q4 or maybe Q1 into the next year. Rest 118 crore, which has been issued into the last preferential offer, will be received into this year, 25-26, and maybe part into the 26-27.
And what will be this 155 crores used for?
It's warrant. For basically, we have allotted 2 times. One time we have given 50 crore to the promoter. Out of which 12.5 crore they have given 37.5 crore, which is going to come. That I have told you this year, Q4 and the first quarter, we will get that amount. And the rest will be the new preferential offer very recently, which we have closed, roughly around 118 crore of the warrant amount, out of which roughly around 80-85 crore of the promoter and rest from the public, that are going to come into 25-26 and 26 early part of 26-27.
Okay. No, I'm asking what will be the funds used for, like to fund, are we using this to pay the debt?
Don't have to pay anything to the NARCL because all the fund what we are raising, it is only for the business of the company.
Okay. Thank you.
Thank you. The next follow-up question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thank you again. Sir, as you mentioned that there is an order book of 2,500 crores and L1 of 2,800. So by the end of Q1 FY'26, we will have roughly 5,000 crores of order book. And as you said that we do roughly 30% of execution each year. So that would translate to 1,500 crores of revenue. Is this understanding correct?
It should be.
But I'm asking this question because this is not tallying with our revenue growth guidance, as you mentioned 30 to 50% revenue growth. So that is ranging between 1,000 to 1,150 crores. So
no, this should be, because whatever is the roughly around this year, as I told you, this year our revenue for all the water company, water EPC company was subdued, which I have told into the Q2 Concall also, that Q3 will be tight. Q4 will be better than Q3, but it will remain tight because very recently all the money started coming and all the order etc. has started coming. But the next quarter, our existing order and the new order which we are targeting into the Q4 and Q1, the impact of that will come. And you can take 1/3 of the total as a revenue to that year. That is a thumb rule. Plus minus 5%, 10%.
Yes, I understand that. Got my answer, sir. Thank you.
Thank you.
Thank you.
Ladies and gentlemen, you may press star and 1 to ask a question. The next follow-up question is from the line of Kevin from Siddharth Partners. Please go ahead.
Sir, there are 2 pointers. One is with respect to this non-fund-based limit that we are
Siddharth, आवाज clear नहीं है बॉस. थोड़ा सा अगर माइक को ले ले.
ये non-fund based limit जो हम लोग यूज कर रहे हैं,
हाँ,
couple of players who are also trying to sort of use bonds or surety bonds, so to say. Are we not exploring that to sort of reduce the cost?
No, we are exploring. So if you see the surety bond mainly started into the road project.
Correct.
What project started, very 1 or 2 projects has come into the surety bond. But we are discussing with 1 or 2 insurance companies to get the limit into that. So whenever those projects where the surety bond can be used as a performance bank guarantee, etc., we will use that. So that process is also going on. We are discussing with 1 or 2 insurance companies who are for getting the surety bond limit. But in water, all the projects are not with the surety bond. In the road, it is more.
Understood, sir. That's helpful. And sir, second just question on this warrants. This warrants, whenever it is infused money, will be convertible only at the pre-decided price, that 217 or something, if I remember it right.
There are 2 warrants. One is 118 and second is 215.
Okay, so the left out portion is at 118 or 217?
215, which is the very last preferential offer we have issued. All the warrant which is coming into that preferential offer will be converted into 215. Okay,
so balance which we have to receive roughly 130 odd crores from promoter and investor will be at this price, right?
No, if you see the warrant, there are 2 warrants. One is 37.5 crore, which is exclusively promoter, which we have issued past back is at 118. The last warrant which we have issued to the promoter and various investors, that is at 215. So whenever the money will come, it will be at 215.
Okay, understood. That's helpful, sir. Thank you. Thank you very much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Mayur Gathani from OHM Portfolio Equi Research Private Limited. Please go ahead.
So can you please explain what do we intend to do in the battery energy storage and how do we get the capex for the same?
Battery energy is a part of the transformer. And the government has made it mandatory that every companies who are in the renewable energy has to utilize 10% into the battery storage, because the battery earlier, if you see, the power can't be storage, but by now with this battery energy storage system, power can be storage and that can be utilized for the peak time and non-production time. So that was the main purpose of this battery energy storage system. At the moment, we are planning for the EPC of the battery energy system. So we will take the order and like we are converting and we are making to the container for the supply to this along with the transformer as a battery energy storage system that we are going to do at a EPC basis. Future, we have the plan to have the setting up. We may plan for setting up the manufacturing of the battery container, basically the battery pack, etc., and to make the EPC. But at the moment, we will do as a EPC business for this battery energy storage system. Where that there is like any other EPC, the same way it will be. Capital expenditure will keep on incurring and we will keep on getting the money by way of RA bill.
Okay. So has the government floated any tenders currently on this, or it is expected to float next year?
1 or 2 tender, 3-4 tender has come. We are floating to all this tender. We are also participating, and we are expecting at least one order into the next financial year.
Okay. So what you're saying is basically with the renewable energy or other things, government has made it compulsory for having 10% as battery storage to store the power, and you will be doing the EPC work for that part of the business.
That's correct. We are in any case transformer. We are implementing the transformer for any water unit, power unit, because that is the transformer. Every power unit needs the transformer. We are from the last 40 years we are supplying and is constructing the transformer. Battery energy storage system is a part of that transformer. So we are qualified for all the type of transformer, and battery energy is a part of that. So no separate qualification is required. We are qualifying into all the battery energy storage tender.
Got it, sir. Thank you very much for that.
Thank you.
Thank you. The next follow-up question is from the line of Raman from Sequent Investments. Please go ahead.
Sir, can you hear me?
We can hear you.
Sir, earlier you said you are also planning to set up a manufacturing plant for manufacturing of battery packs.
At the moment, that is not. But going forward, there can be a possibility. But at the moment, we are doing only the EPC. We are planning to do the EPC business of the battery energy storage system.
Okay, sir. And my one more follow-up question is with respect to the order book. You said 2,500 crores of order book, out of which what's the L1 order book with respect to L1 projects?
At the moment, other than our existing order book of 2,500 crore, we have the 2,853 crore of tender where we have already qualified as L1. The order LOI we are going to get converted into this fourth quarter and maybe early part of the next quarter in tranches, because there are 4 or 5 orders into this 8,053 crore order, and we are identified and participating roughly around 12 to 15 tenders of roughly around 9,000 crore, which are going to come into this quarter and early part into the next quarter. That will also get converted into LOI. Part may converted into LOI. So these are the order potential which we are going to get into this year and early next year. And as I told you, because there was a delay in the process of tendering of water because of the water or tender because of the Jal Jeevan Mission. So we are expecting a sizable further order going to come into the Q1 and Q2. That is where also, as I told you, we are from last 45 years, we are into the water and power sector, and we are qualifying company for almost all the water orders. So further water order, whatever tender will come, we will further participate into. So there are three. One is existing book of 2,500 crore. Second is the existing L1 of 2,853 crore. Third is the existing tender which has already been floated, roughly at 9,000 crore, which we are targeting. A float tender is more floated, but we are targeting into the 9,000 crore. Fourth, the tender which was not floated because of the government slowdown are going to come going forward. So these four elements will cover into our next year order book.
Okay. And so from the 90,000 crores bid which you bidded for, what's the conversion rate, like the win rate?
In 9,000 crore?
Yeah.
We are targeting to bid. The tender has already been floated. It should come. Conversion of tender into the order, basically it's very forward-looking, so I will not able to do that. But all where we are qualified, and few of the orders which are of the bulk and we are targeting to take that, so it should get a reasonable amount we should get. But conversion will be the informing to the conversion or indicating may be the forward-looking.
Okay. Yes, sir. Got it. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants that you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Manoj Dekka for closing comments.
Thank you for participating into the Q3 annual annual Concall. As we told you, the water business was slightly difficult into the last 2 quarters. We are expecting that headwind to come out, and the Q3 and going forward the next year should be better for all the water companies. There are a lot of tenders which are there, a lot of tenders where we are in L1, and a lot of tenders are going to be floated, and this will give us a substantial opportunity to take the new orders. So we feel with these new orders and with the existing order book, we will have a good year going forward, which is going to come. Along with the water, there is enough opportunity into the power sector because of the BESS, and the government focus into the water, irrigation, river linking, and the BESS will give the company enormous opportunity in next 5 years to grow in a sustainable basis, both on the top line and bottom line. As I told you earlier also, we have taken the target that we will not be focused into the top line. We will be very, very focused into the bottom line, and we will target to have a order book which is good, profitable, and which is easy to do, complete, and which is meeting out our target of taking the order. So our target is 5,000 to 7,000 crore every quarter, not that, whereas the opportunity is very, very high in all these sectors. So that's our target, and that's the way we are moving forward. Ag sector is there as our investor relation. Kapil Joshi is there for our investor relation of the company. We keep on coming to Mumbai, so anybody who wants to discuss in more detail, understand more about the company, we will be happy to meet. We will happy to discuss. We will happy to share the information. We keep on sharing the information to the stock exchange on all the update. You keep on getting the same from our website. Thank you, sir.
On behalf of SPML Infra Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.